Welcome back to the Trend Trader channel. In today's video, we are talking Tesla. We know that Tesla recently released their quarter two earnings of year 2023. So now we will be going through that earnings report to see what Tesla reported, and also we'll be looking at the chart so that we can identify potential trade levels. Before we begin, I would like to ask those who haven't subscribed to please consider subscribing, and if you find value in this video, please make sure that you smash that like button. A lot of companies have started reporting their earnings. By a lot of companies, I'm talking about tech companies in the US. Also, Netflix came out with its result, but we'll cover Netflix on a separate video. So what we see here, you can download the Tesla earnings for quarter 2 of year 2023, and then you can see some of the highlights there. For now, we're not gonna focus on what they reported here on the highlights. What is important to highlight is that if you are in a car business, then you need to generate money from the car business. You can see if you look at the total car revenue, comparing it year on year, so meaning that you are looking on quarter 2 of 2023 versus quarter 2 of 2022, you can see that there is a 46% increase there year on year, from 14.6 billion up to 21.3 billion. And then if you compare it quarter on quarter, we look at quarter 1 versus quarter 2, you can see that there's about a $2 billion increase from just about 20 billion to about 21.3. So that would be about a 1.3 billion increase there. So it is good to see that the company is in a car selling business, and it is able to generate revenue from selling cars. But also there is energy solutions, and then there's service, and include other revenues there. So you can see all those revenues are above 40%. So that is it's good numbers. You can look at the total revenue, so it's 24.9 billion compared to that year on year, which was about 17 billion. So that represent about a 47% increase there. So that is good. You can say that Tesla is a company that is able to generate revenue, and it's not just the revenue. You can look at the gross profit of about 7%. It means that the company is able to generate money from that business. It's not just money coming in, but the company is able to generate a profit, because you can have good revenues, but if you have bigger expenses, then that will result in a loss, and that is not something that is good. And then lastly, looking at the earnings per share, which are attributable to common stockholders, so we can say 20% increase in earnings per share if we look at year on year. Previously it was 65 cents, now it's 78 cents. If you compare it quarter on quarter, it was 73 cents. So there's a 5 cent increase there in terms of earnings per share on a quarter on quarter basis. Okay. And then we can see the free cash flow. A lot of people, they like to look at free cash flow. We have a free cash flow of 62%. I prefer to look at the cash and cash equivalent, because cold hard cash is important more than anything. You can see that the cash, in terms of quarter on quarter, it increased from 22.4 billion to 23 billion, and then year on year it increased by 28% from 19 billion to 23 billion. So again, these are all good numbers. It's something that excites me. As a shareholder of Tesla, I do have a position on Tesla, so I'm happy with the numbers that I see. Then now when you look at the number of cars that are delivered, we can see that last year, quarter on quarter, Tesla delivered just shy of 259,000 cars, and then on quarter 2 they have delivered a total of about 480,000. So it's 479,700. So it's 300 cars short to make it to 480,000. But that represents an increase of 86% year on year. Then when you look on quarter, then you can see that it increased from 440,000 to just shy of 480,000 there. So these are all good. This is in terms of production, not deliveries. The deliveries are here. So the total deliveries are 466, and also they represent about 83%. So only a few cars that are not delivered. You can see the difference there. They say that these cars are subject to operating lease. So what is important to highlight here is that Tesla is able to generate or to produce these 480 cars, and then they can sell most of the cars, because we don't want to produce something and then it just sits there as inventory and then it is not sold, because then that will be a problem. It means that you are producing a product that people are not interested in. Then yes, on top of that, then there is a lot of other things that they talk about. So now let us look at the numbers, because remember, the numbers, it's all that count. Then we can look at the total revenue of Tesla, combining car sales, some credit, leasing, energy generation, and other services. So we see that Tesla generated a revenue of about 24.9 billion, as we mentioned previously, and then they have a nice gross profit of about 4.5 billion. And then the important thing here is the operating profit. You see, before, from gross profit to operating profit, we need to first remove the operating expenses there. So what is important is that after the gross profit, Tesla is able to produce an operating profit of about 2.4 billion, which represent about 10% margin. And then now finally we're looking at the net profit. Tesla has a net profit of 2.6 billion. Then from the net profit, then we can start to see things such as earnings per share. So now you see the earnings per share that are reported. This is on Twitter. They do this Twitter handle, they do a nice summary or financial summary of those companies that report their earnings. Not all of them, but for most of them. So we can see the earnings, it's about 91 cent there. In terms of earnings, again, this is good thing. The most important thing is that there's revenue that comes in. We left with the gross profit, we have an operating profit, there's a net profit, which then translate to earnings per share. So in terms of fundamental analysis, based on also the car deliveries, then we're happy that Tesla is a company that has solid fundamentals. But that is not all, because just because the company is coming up with great numbers, it does not necessarily mean that the company is a good stock to buy at that particular period. So now what we are looking at, remember, we've been buying Tesla. We first bought Tesla when it broke above this level. This was a level of interest. Then again, we bought Tesla when it pulled back from that previous breakout retest. We made a video of showing you guys how you can make money when you buy a company from a breakout. If you miss a breakout, you can buy. It's another chance to buy on a pullback. If you miss a pullback, then you can buy when the other breakout happens in here. So we call this a pullback and a retest and breakout strategy. It is something that we have traded in the past with a decent amount of success. It's something that we're still going to continue to do, because so far it is working for us. We are happy with the result that we are getting from it. Right, so now where to from here? You can see that our recent position that we took it here. Tesla was just consolidating. Then we bought Tesla when it broke above this level. So far that position is on profit. Tesla is just trading below of $300 per share. So where to from here? Where is the level of interest? What we're looking at, we want to see what happens from this level. Let's try to make a decent drawing. So from this level coming up to this top part here, this is the area where we are more interested in. So what do we expect to see to happen from this area? It's very simple. As we said, we already have a position. Best case scenario is that Tesla pushes to reach this high, which is somewhere around $480 or $490 here. You can see this level, it's about $413. So the difference from the current price of $291 to just here, it's about $100. So on the upside, we are looking at a potential $100 move. That is a move that we'll be excited to see if it pans out. We hope that the market will interpret the recent Tesla result as positive, but always there is always that other potential downside scenario that you have to prepare yourself for. So this is a level that will be interested to see what is going to happen. So this is about $200 per share. We don't want to see a move on the downside, but if it happens, then at least we have an idea of what we expect to see. On our recent entry, our stop is just above a break even. So if the move is downside, we're not gonna lose money from that position. Then obviously the best case scenario is that Tesla pushes all the way to 400. Maybe we see a bit of consolidation there before there is a breakout on the upside. So again, we have a long position, so naturally we are rooting for a move on the upside. But in any case, if the move decides to go downside, we have a way to manage that risk. So these are the key levels that we'll be looking at when it comes to Tesla. We are looking for this move where the stock will maybe move to this previous high here and then consolidate a bit before it break out. But given our current position, we are waiting to see if Tesla can come to test this $400 position. A move that we're not interested in is any downside move. So that's it that we wanted to cover with regards to Tesla. If you found this video informative, please make sure that you smash the like button. If you haven't subscribed, please consider subscribing. In our next video, we're going to be looking at Netflix earnings and also looking at the financials and the chart of Netflix to identify potential trade levels. That's it. We will see you in the next video.